Welcome to Taking Stock. It is Tuesday, the 8th of the 8th, 2023. I'm joined by John. I've had some technical difficulties, John. My windows are disappearing everywhere. What's going on here? Anyway, here we are. We're live. It's a bit of a damp Tuesday. Markets are looking okay, though. And what I want to ask, by the way, before we start, please hit that subscribe we're piling on the subscribers. We want to get this. If you care about investing, if you care about anything about the small cap space of that, we want to create a nice little community here. We can suggest stocks, we discuss them, we look at them, some good ideas, news you can use. I think that's the term. So
Nice.
Anyway, so subscribe there. And first and foremost, I want to ask, and I think this is an age-old question which people talk about, is how many stocks should you have in your portfolio? I've got a massive opinion on this. I've literally written theses on this, and so I got my opinion on this. What's your thoughts? What do people reckon? Let me know, please. John, what do you think?
15 max.
Yeah, max
15. I noticed a comment in reply was whether we just meant individual equities or whether we included sort of fund investments in that as well.
I'm talking about individual equities. Because, and there's a point to this, because if you are, doing sort of, if you're owning, I think, more than 10 shares, it's pointless. If you are if you're a full-time investor trader and you keep an eye on it non-stop, that's fine. But if you are, this part-time, you've got a job and you come home, look at stocks and shares in the evening, you haven't enough time to look after more than 10 companies. So I'd say in that case, you may as well get a fund, anything more than 10, get a fund, but stay below 10, then you can focus on those companies. That's what I think anyway.
Yeah. I mean, I think you can probably stretch it a little bit more. I mean,
15.
215. I mean, I don't think really you want to hold many more than that. The diversification benefits do start to tail off. It's sort of like a downward sloping sort of curve in terms of the diversification benefits. The more stocks you have. 15 is a sort of commonly held rule of thumb, but I mean I don't think you need to worry. I know you say looking after your shares, but I do have a slightly different view, which is you shouldn't buy shares that you have to look after. It should almost be to a certain extent a fire and forget type thing. We should be investing for the long term. Therefore, tracking your portfolio every day is probably not a good idea. This is what encourages what our listener yesterday referred to as tinkering.
Yeah. I don't mean looking at share prices. I mean actually news. When you own more than 10 companies, I don't think you can do deep, thorough research on 10 companies if you're spending half an hour an evening because you've come home from work knackered. You shouldn't need to. I mean, you should know your companies quite well, I believe.
Well,
I think anything above 5 or 10 gets really hard to manage. It's like having 5 kids.
Yeah, I think. Well, I wouldn't advise that either. But you should have done your research up front when you buy a share.
Yeah, I know that. I know we should.
The time should be spent before you make the purchase, and therefore, unless the investment thesis changes dramatically once you've bought it, there should be very little that takes you by surprise. So I would say, a constant monitoring of news in your portfolio is really just going to encourage action, which may actually be detrimental. Over trading is definitely something that costs investors a lot of money. Do the research up front, get comfortable with the story, and then only if something really significant changes, and you don't need to come back to that, every week to keep an eye on it. Should you really think about making significant changes? I'm definitely a sort of stay away from your portfolio type of investor.
Yeah. Well, it depends if the story's working out. But I think generally I probably do about 30-40% of my research before I invest in a company, and I tend to get more knowledge of the company the more time I hold it, and of course you do the backstory, because I will then, once I own a share, I'll go back many years and look at everything. But when I start to invest in share, I pretty much look at the last 6 months worth of news, maybe 12 months in full year results, but then I start going back further and then look at the sector bit more and all that stuff. So I think you do more research when you own something because you have skin in the game. You need to, it's hard to research a company, I think, fully before you have any skin in the game. I know, people say people say we should do that. Yeah. I mean, I've jumped into companies after 5 minutes because I've looked at them, looked at the valuation, looked at the sector, and thought, wow. And I've made sure there's nothing wrong, like overly embedded with debt or something. I think, well, why is this? And I've jumped in, but then I don't go too big. That's the thing. Don't go too big too quickly. Anyway,
there is a danger when you do too much research that you find yourself facing information paralysis. So, you've got so much information, and it can, you can interpret a lot of things either way, that you do nothing. There is a balance to be struck. As I say, I just wouldn't advise regular tinkering. So I'm not worried about owning a few more shares, but because I don't feel you need to come back to them day after day after day.
Okay. But what I would say, listen, don't over diversify. There's a fine line. Like over diversifying, not to get any return. If you've got like 50 stocks, if you've got 50 stocks, you're a private investor, you're wasting your time. You're not going to make a return on any of those. That I would say is true. Just get a fund, and you can get to hundreds of stocks in that one fund, and just focus your energies on a smaller number of companies. I'm not saying go big on them. I'm just saying focus more and learn about the company. They are businesses, and it takes a long time to learn. I have 25, which includes a few ETFs. AI investor says. Does he mean 25 including those?
I would say so. Yeah.
Okay. Matthew Roberts says Renold seems very cheap. Also, John bought some Somero when you said you sold. He bought your shares off you, I think.
Probably, yeah. I mean, I'm quite pleased I sold at that point. I mean, the recent numbers weren't too bad, but it's really struggling. It's really struggling to break back above. I think I sold at 350. I haven't looked at it for a while.
Let's have a look at Renold a second on the chart.
Renold, we're talking Somero, by the way.
Let's look at Somero as well. So Renold, that's looking good. It's come from it's in uptrend basically. It's had a little break, pause, back in uptrend. It needs to break that 32 level. Look at that. It keeps 32, 34. Really needs to get above that. Somero SOM. Now they do these high-tech sort of concrete floorings, don't they, for industrial buildings and stuff like that? And
floor leveling.
And that's definitely downtrend there. From look at that, almost head and shoulders pattern. Lower shoulder here, head coming down. Break. This is called a death cross. Goes 50, breaking the 200, and down we come to low. And in fact, if you late getting out there, you could say, well, that's a support level there. If they break that level again, they're going down a bit further than they have. But I mean, you could suggest that even the 200-day moving average, always be aware of that. If your company is a liquid stock and it's breaking that 200, I mean, with smaller caps, they can move around a bit more and you get spikes through that and down quite regularly. But if it's a bigger stock and it breaks that, you think, oh, hang on a sec. Because if you look at the uptrend, a good example is look at the uptrend here. It hasn't touched that 200-day moving average from, November 20, and then it dipped back below there at November, a year later. So, hang on, first time to come. You should get an alert on that if you're on the charts. Then it moved up again. And the second time it did that, right, okay, that's a bit of a red flag there. It's broken a 2-day moving average. That means people are selling.
It's super cheap. It has been for a while. But then it's also super cyclical. And that's the problem here. But today, again, if you're happy to sort of sit through, a sort of bit more cyclicality ahead, this is in deep value territory, and actually, what Somero is really, poised to benefit from is that the further explosion in sort of e-commerce and automated warehousing, which is really what requires these super level floors, so that robots can work and your great big stacks of shelving can be put up safely. As soon as we see some signs of recovery in that market, and we know that companies like Amazon, which are obviously big investors in warehousing, had started to pull back from investing a couple of years ago. Amazon had some really good numbers out earlier this week, in very much in contrast to Apple's on the same day, and we saw Tritax Big Box, which is one of the UK's big investors in sort of retail e-commerce warehousing. The guy that runs that sort of said, we've hit the bottom here. There had been a bit of a bubble, but they're now talking about the bottom coming in the warehousing market. So Somero could sort of trade along with that narrative there. So I wouldn't say it's a bad buy, but I just got very, very, very tired of waiting for this one.
Yeah. I would say that. No, I do like the bounce here. It literally that bounce there. When you get a big sell-off, look at the RSI here. See, massively oversold down to 17, and you normally get a bounce on that, then a settle. But it needs to get above this level. Like that previous support there is now resistance, so it needs to get above that 350 level, hopefully, where it bouncing off previously.
Yeah.
But on question you said, surely depends on the market cap, as in how many stocks you have, how many research you do, because mega caps less fine, but nano caps are perhaps more simpler to understand. They are. That's why I like micro caps. Especially for one story stock. When you've got some of big companies like, I don't know, if you imagine looking at AstraZeneca compared to like Destiny Pharma. Destiny Pharma's got a couple of assets. In fact, they've got a pipeline as well. But AstraZeneca has loads of stuff going on there. And even though you don't have to worry too much because they've got cash coming in, you're never going to keep over the story. And that's for bigger stocks. I find bigger stocks so boring. That's why I've got a fund. Just cover them all. And then go for the smaller cap stocks, which are more exciting, more upside, more reward, more risk, all that. Just more exciting, generally.
Yeah, but playing devil's advocate, AstraZeneca is a diversified portfolio of lots and lots of exciting treatments. It's not
exciting. It's boring.
It's exciting stuff. It's
that's why it'll be if a bigger fund. Just comments from yesterday. Just some people are knocking EVs. Paul says my Tesla Model Y is the best car I've ever had by far, and the supercharger network is very reliable. Michael, love these daily updates. Can you have a look at Upland Resources, please? Climbing massively, and that's without news. Tar, we'll look at that. Free capitalist. Do they make a diesel version of these so-called EVs?
I think my favorite comment was the one suggesting that we're just a couple of old men.
A couple of old men talking about EVs. I know, thanks.
A couple of old men, as though we were talking about, this new thing called the internet. That was my favorite, I have to say.
Yeah, a couple in favour of them. It seems like for shorter distances, for the commuting to work and back, it's fine, cracking. Mike says, Sandy, you have to talk about degradation of EVs all the time. Anyway, let's look at some content on Vox here. Let me just find the front page of Vox so we can get it up here. voxmarket.co.uk. Don't forget to subscribe to our YouTube channel there. SDI's strong 2023 results. Chris, I thought I saw Paul. Oh yeah, Paul was doing into LungLife. That's a company I would look at. I read some stats on that, but it's about lung cancer. They've got a test, which is it's a blood draw. It depends on, but lung cancer is the biggest killer of all cancers combined. Right, it's bigger than prostate, breast, and colorectal combined. So they're tackling that area, and their tests are 89% accurate, and I think the nearest best to that is about 10% lower. And they've just gone through a pivotal test with 423 people. They've done a pilot test showing very good results previously in 2021, but the results are coming out of that test in September. So it's worth watching that interview, because even the market opportunity is very big compared to where they are as a market cap. They're like 15 million, and their tests are about £2,000. And just go through the figures there, and I'm sure it's got this right, but they're looking at targeting 1.5 to 3 million tests a year. Now, if you do the maths on that, £2,000, John, do the maths on that, £2,000 times 3 million a year, that's a phenomenal amount of money.
It's 3 billion.
Yeah, well, exactly.
But that is the total addressable market.
Yeah, total addressable market. Yeah. But it's very worth looking at that interview, I think. I haven't checked on the fund manager series there. That's Chris.
No, I haven't looked at that.
No, what Metals One? What's happening there, John? Anything on there you want to talk about?
This is newly floated, and it's quite an interesting company. Projects in Norway, and actually, that marks it out. I would say, if you remember, we've spoken this week or recently about jurisdiction risk for miners. So if we've got projects that are underway in safe jurisdictions like Norway, then they're definitely worth a look. Very much like the sort of Green Rock graphite projects in Greenland. So yeah, this is an interesting project, the Rana project, nickel, cobalt, copper, and we know that these are all important elements for the energy transition, for sort of battery metals. Going back to our conversation about EVs. And yeah, it's a really sort of, very, very sort of mining lingo laden update today.
Yeah.
But the upshot is this looks like a very prospective resource, and they're making some really nice progress there. And obviously, as I said, that ties into the critical metals theme, which will become increasingly. I mean, whenever you think about EVs today, there will be lots of them, and securing supply for the batteries is massively important.
Yeah, there's a copper chart there, a chart of copper, and you can see it back here down at what, 2. I don't know what this is. It's in kilograms or something, or pounds. I don't know what this is. I don't know, but 2 there, like that. It's from that was 2015, and they came back down to that in 2020 with the COVID gas for crash. It's rallied very strongly up there. It's doubled, more than doubled, to almost 5. But now we're sort of settling back. They see a big rise. You always have a consolidation, a bit of a sell-off maybe. And in fact, some figures up from China today, not very good, are there? Have you seen those? Just scroll down to the
import-export figures, yeah.
And the reason why I say this is because, of course, the commodities and resources are largely, swayed by what China's doing. Because I think last looking at it, they did require about 50% of the world's commodities, China. So, but a tumble in China's trade last month has reignited it concerns. The world's second largest economy is stumbling. Imports dropped 12.4% in July on year, and customs data showed Tuesday worse than the 5%. So 5% was predicted. They dropped by more than double that. And exports also fell faster than expected, contracted by 14.5% after June's fall. So that's quite worrying.
It's a big
more than double the forecast. And also, this is from June's fall. It's gone down again, 14% from 12.4. So it's always, they haven't rebounded since the COVID lockdowns, have they?
It's a very tricky one. I mean, obviously China is.
That's why copper's down today, by the way.
Yeah, well, not surprised, but this is a very, very tricky one. China, it's so deeply embedded in sort of global trade that these figures have read across for everyone. Everyone. So imports into China, there will be things like raw materials. Obviously, they're a great big manufacturer of almost everything the world consumes, and things like industrial goods. So large plant, and one country in Europe that's massively exposed to this is Germany. So Germany, very, very much an industrial powerhouse. There was great big machines, and China was for many, many years a very large buyer of those. Germany is looking like one of the weakest economies in Europe at the moment. It's been in recession for the last 6 months, and there's not really much sign that that's going to improve, especially with figures like these. I guess it sort of actually does just tie into your thesis about inflation. That these figures do not sort of suggest that the economy is likely to run away, to overheat, because if China's exporting less stuff, we're buying less stuff. This is all part of the same thing.
Exactly, and they're now importing or exporting deflation. So
precisely.
It's going to come down. It's going to help a lot.
Precisely, but it doesn't. What it doesn't say to me is that we have an economy, a global economy that is in good shape. We are in problem territory. We still have inflation. We still have inflation. We still have inflation, and we still.
Yeah, but hang on a sec, John. But remember, let's not confuse the economy and the markets. If we're going to have problems with the economies of the world, and there's going to be serious problems, the central bank's going to do one thing. They've got that one big lever, essentially. Well, they've got 2 levers really: QT, QE, and interest rates. But essentially, they're going to ease up. I know they talk tough. We're going to hold them higher for longer. But if they see serious problems with the economy happening, they won't do that. They'll ease up a bit, and that's good for the markets. The markets, I said, especially in nano-cap, microcap world, it's already bottoming. There's been so many rallies of late in the nano-cap space, double, tripling, and you haven't seen that for months and months. So it's almost like, in nano-cap and microcap market, it's like lungs. The alveoli of a lungs gets the little sort of capillaries get smaller and smaller. You go down. So all it takes is a little bit of liquidity in those, smaller cap spaces to really move them. But when they first get drained, almost like when you go in a bear market, the lungs get drained, and the liquidity comes out from the bottom first, and then all of a sudden the cap goes back on the lungs, and liquidity fills back up. I'll give you an example. Someone said, "Can you have a look at Upland today?" Right? Upland's rallying pretty much on not a lot of news, but I'll show you the chart of Upland. It's done 10 bags. I used to hold Upland a while back, actually, when Steve was still there. But look at that. It's gone from on 0.2, 0.3, up to 3 pence. And this is the kind of what you start to see this when I believe the end of a bull market, bear market, happens. And in fact, what have they had? All they've had is Sarawak, which is in Brunei, of course, huge amounts of oil and gas, because the Sultan of Brunei, famously rich, just sitting on reserves in his big throne on reserves of oil and gas. But they're progressing with the assessment onshore rig for block SK34 in Sarawak. And they say preliminary, this is all it's rallying in, by the way, discussions with the government and all that, and the regulatory powers. Preliminary estimates suggest significant hydrocarbon resources in block SK34, comparable to neighboring billion barrel Seria field and Europe's largest offshore oil gas reserves. And he did say, actually, that we don't need to raise capital, I think he said here.
That would be key.
Company is well financed to meet its operational commitments in 2024. So you've got an example there, a potentially big resource, and they don't need money as yet. So the company was at like a 2 million market cap, something silly, and you get a rally, of course. So a huge rally. The chart there. Where's the RSI? Yeah. It's the RSI. Right, we'll be worried about that now, because if you look at the RSI on this, whenever it's gone above sort of, and I say anytime an RSI, relative strength index, goes above 85, it's not sustainable. I'm not saying it'll drop off a cliff, but it'll have to come back a little bit and maybe consolidate for a while, to cool off a little bit, for that, to bring that down a bit. But that's gone like crazy. And also, he did say there, who was that saying there? Have a look at DEST Farm, because John likes
again.
That.
I couldn't work out whether they were taking the mickey or not.
No. So there we are. DEST Farm, another one there. RSI is not as overcooked there, but not quite. But again, it's risen. There are a lot of companies like this at the moment rallying very strongly. In fact, one of our friends there who's commented quite a bit. Ondo again, news today out on those. They've hooked up with Pure, I think it is. Is it? Let me get the thing. Let me go back to the front page. They are one of the most read.
Yes. Pure Insurance.
Yeah. Where is this? But it's good. It's news. I mean, I'm not saying these are all going to be significant, these contracts, but the news flow with Ondo is powering that share price. And regardless of what you think of valuation, and finances, just sometimes news and hype. So Upland is a good example of a very good hype stock here. You've got these billion barrels of oil under the ground. How close do they get out? Not very close. It doesn't matter, though, because you've got a tiny market cap and nothing was priced into it pretty much. They've got a bit of cash, it seems, and now they're moving forward. So it seems it needs a re-rate because it's been too cheap for a long time. And you're getting that a lot of micro-cap stocks. Some are just too cheap. And so they need that re-rate just to get back to where...
Define cheap. Define
cheap.
It's
cheap is like when you got like 10 million market cap, and your assets that you're going to realize could be potentially worth millions or tens or hundreds of millions, and you think, okay, and they've got cash, don't get the market. There's that kind of cheapness. You just think, well, compared to what the option they have,
option cheap.
Yeah.
Sort of makes sense. I mean, I just go back to Ondo. I mean, I still think this is a very interesting story. I don't have any forecasts on my system.
No, oddly, I did contact. I mean, we do on Vox. We have the market cap. I gotta say, we have the market cap of everything here, and Ondo currently is 28 million on the shares issued there.
Yeah.
But even on Trading View, normally they have like the market cap down here. They haven't even got it. I did contact them and said, "Why have you got the market cap?" So there's not many forecasts out there.
Yeah, I want to see the forecasts.
If you look at what do they do recently? Was it what was the revenue on Ondo? I can't think what it was. I mean, people are just sort of pricing in potential here.
There are no revenues. Last year there were no revenues.
No, hang on. Where's the financial report? There was revenue. Yeah, there was 2.4 million for Ondo.
Right.
But that's 10 times sales. So that's not cheap. That's funny
because it's showing up with no revenues on my system. But anyway, yeah. So we are,
Can I say, whoever's in charge of PR there at Ondo, get connected to the sources. Trading View to what's your platform there, John?
SharePad.
SharePad.
Not showing up any revenues
because they're lacking information. So Whoever's in charge of the PR, get your finger out.
But yeah, I mean, it's an interesting story. You would expect this to scale rapidly, signing lots of partners is good. And, as we've talked about before, well funded to do it. So,
yeah. When you're looking at, if you want a multi-bagger, I did talk about this on the webinar thing, 3 S's you should look for when you're looking for a multi-bagger. First of all, is size. Like, the maths, when you double, if you double from a very small size, like I said, Upland is now 10 bagged, it's still about 30 million market cap. So it's not like an expensive company at all. It's still a micro cap, nano cap. So first of all, look at size. It's something. And I did it to a stat on this recently, John. Do you know 60% of the best performers, and I looked at 12 months, 6 months, and all time, were below 100 million market cap. 41% were below 50 million market cap. So if you want to look for the best performers, then you've got to look at size. So size is one. Scale. Do they have scale? What they're going to sell? Can it sell around the world? If it can, when you got biotechs, of course, you got unmet medical needs that can sell to millions of people or billion barrels of oil. That's scale there. Or even Ondo, I suppose, their tech can scale quite well. So size, scale, and also is there something special? Do they have, if it's tech or biotech, what do they have that other companies don't have? Which will make them stand out from the crowd, that's the kind of thing. So the 3 S's I look for in there. Anyway, let's look at the front page again. Anything else on the front page here worth looking at?
What have we got up there?
That's the biggest rise today. Tirupati Graphite is down on their Q1 update. So the tonnage has gone up a bit, but I did look at the last time. They didn't have a lot of cash there, but
lots of cash in there. Yeah, Atlantic Lithium, decent resource, decent drilling results as per usual. The thing hanging over this, and again, it's something we spoke about recently. The shares have sold off quite heavily today.
Yeah, and yesterday. I mean, look at the chart.
Yesterday,
it's just because, go on.
Well, you're speaking to Neil Herbst shortly, aren't you?
Shortly,
I will try not to steal any thunder of that. But I guess the question on everyone's lips is what is going on in Ghana? What is going on with mining codes and the sort of the mining regime in countries. Atlantic was well progressed with plans to build the first lithium project in Ghana. But there is all sorts of stuff going on in West Africa, which is not really pleasant for investors. We know that the coup in Nigeria has had all sorts of effects on the uranium market. We saw what happened in Chile there with the lithium industry and the nationalisation.
That's interesting, actually. I don't know if it's going to be the same here, but in Chile, of course, Cleantech Lithium, and we spoke to quite a few times, they had the same kind of thing happen there. The government come in and talk about, their plans for the lithium and they said they wanted to protect any projects that is of national significance. And with Cleantech Lithium, CTL ticker, they said that even though their project was obviously significant for them, it's not on a national scale because Chile has some massive
they're open
lithium
open pool lithium production.
It's not big enough. It's not big enough for the government to worry about, basically. But with Atlantic, we'll have to see. They said they're not that worried about it. But I'll chat to Neil about that.
Yeah,
the share prices. First of all, you had this sell-off there, and then done here. It's hard
that was the short selling. So the interesting thing here is, it wasn't long ago that the Ghanaian mining authorities were actually, making lots of positive noises about their tie-up, how they were working with Atlantic Lithium. So you would hope that nothing has changed there. But I guess we'll find out more shortly.
Some people say they got into Supreme. I know Paul's chatting to Supreme. They do vapes and stuff. Pretty much, they are another seller for Elf bars and something Mary, the other ones. But the thing I'd worry about when I'm investing in stuff, I do worry about things that have potential regulatory pressure. And you've seen now a while back, actually, the government were talking about this, clamping down on vapes and that stuff. So even though they're cheap, it's pretty cheap for a reason. There's that worry hanging over them, gambling or tobacco, that the government can change the regulations on this, because there's a lot of pressure now coming from, parents of teenagers saying these are not being marketed to people giving up fags. They're being marketed to kids because they're brightly coloured and they're like alcohol pops, aren't they, of the day? They're all these flavor. So yeah, but it needs to, on the chart wise, it needs to pop out of that. So you can see that range has been in for a long time, from 117, to 91. So if it breaks above that, maybe in fact 121, maybe it's an uptrend. But yeah, I just think obviously it's doing very well as a business, but there's regulatory pressures there's government pressures and all this social pressures about vaping and the litter, and not only that, there's lithium batteries. People just it's not sustainable, chucking them in bins and all that stuff. So there's a little bit of worry behind that.
Well, Supreme did talk about their own systems for sort of managing age compliance with these things.
Yeah.
So and they presented that as an advantage, which is potentially true. But yeah, I mean, it is a tricky one. It's, again, it feels like it's quite a young industry, this, and I think the problem I personally have with this is the same with many things, not just vaping, anything single use, that requires the use of resources that aren't easily then disposed of, but they are single use products. I think that's where the concern lies mainly here.
Yeah, I got a good idea. Why don't they make vapes from like paper and have burnable products inside them? Oh, that's a fag, actually, isn't it? That's more sustainable.
Well, not entirely.
Let's go back to fags. They're more sustainable.
But cigarette filters are not exactly environmentally friendly. I mean, this is
roll-ups. Use roll-ups then, everyone.
Also, you buy cigarette filters which are not environmentally friendly. They're plastic and not disposable.
Yeah. So PHSC, it's a microcap, like I said, nano cap, actually, biggest rise of the day. They provide a range of health, safety, asbestos, hygiene, and environmental consultancy. But the final results, it's always quite nice to see a company rise on financial results, because either they've been sold off massively and they're better than expected, or they're under the radar. So EBITDA, they're positive EBITDA, profit before tax, only small, but they're only a tiny company. They got revenue of 3.4 million. They're less than a 2 million mark. So it's unusual to see a company that small making a profit, so that's probably why they're rising. A bit of a surprise there on the back of that. But other rises today, TIFS, which is a big company.
Company. I looked at this morning.
Even Quilter. Yeah, what did TIFS do? TIFS.
They're basically sort of, I mean, to really sort of oversimplify, the pipes that you have in your car.
Okay.
So when like brake pipes and anything that involves fluid movement, fuel tanks and fuel pipes, any sort of pipe that you have in your car. So obviously, they're the big concern for someone, for a company like that, which there's lots of liquid in internal combustion engines to move around, not so much in electric vehicles. So the big concern here has been how does a company like that has been so dependent upon internal combustion engines move to a very different type of technology, and actually what the results today showed is that it's actually making some very, very decent progress in making that transition.
I like this chart. I'll tell you why, right? What I look for on the chart is for a downward trend, is you want to see a breaking of that downward trend. Now, the 50-day moving average, which is in blue here, is very steep. Now, you want that to level off a bit. But I want the straight price to break that, then break a previous high. So if you look at this, I'll get rid of that, sorry. If you look at this chart here, it broke the 50-day moving average here. You want to see it break the previous high, which is probably here, didn't do, and that's too steep. It did it again here, didn't break the previous high. But now, look at this. It's broken this 50-day moving average here. And you're looking at the previous high. So you say, this is a previous high. So it's broken above that and a 200-day moving average. It's come around. And again now, even if you draw a line across here between this level, that resistance, that's a resistance there of like 141. It's broken. So that's a good start. That is the end of the downtrend pretty much. And maybe the start of an uptrend. So that's quite good on TIFS.
It's good. And one of the ways that they're making this transition to electric vehicles is actually cooling systems for electric vehicles. And we know that lithium-ion batteries are volatile sometimes. So this is a very important part of making lithium batteries safe. Actually, there was a company that we've covered quite a few times. I don't know if you've ever looked at it, but Zenova. And they make fire extinguishers, but specifically a product that they have, which I really, really like the look of, is a fire extinguisher that works on lithium-ion fires. They're really hard to put out. Can't do it with water. So lithium-ion battery, as you get more lithium-ion batteries, the risk of lithium fires becomes greater. So Zenova's tapping into that, and TI as well is part of addressing this problem.
Yeah, that's not bad either. Look at that again, breaking the 50-day moving average through here, and in fact, what I want is a nice little box with a box. Yeah, but yeah, it's almost you could put this. You say in that box there, that's support there, that's resistance. So if it gets above that, not far off that, could break out of there. So it looks like the downtrend has maybe ended. So okay. Cool.
Well, if they've secured some big orders, I think it's one worth keeping an eye on.
MyHealthChecked took a bit of a hammering. Mode has basically come back from the dead, saying we're not going to be delisting now. Maybe they've just announced that they've signed Peters Capital as a corporate broker, and they rallied very strongly, but they've come back a bit now because I think they still need a bit of cash. So,
I can't remember what they do. What do they do?
Yeah, so they originally they basically had you'd shop with normal stores online from. In fact, Boots keeps coming to mind, but Boots didn't know about the scheme, so they stopped it. But you get rewards in crypto, in Bitcoin, basically. So it's like a loyalty scheme, but you build up the crypto, that kind of thing. And the only FCA, I think, regulated wallet listed in the UK, but it didn't. Obviously, this is when Bitcoin started to fall off a cliff, and they had troubles. MyHealthCheck's a bit of a hammering because obviously a lot of their revenue came from COVID tests, and look at that, they come from revenues of 9.8 million down to 2.5. And so, in fact, but they've got healthy cash balance of 5 million. And what are they? It's basically they're valued just a little bit above cash. So
yeah, I mean, if you look at that update, there was something interesting in there that I was making. Funny enough, you just mentioned Boots, but yeah, they've got a big partnership with Boots as well, and I think this is quite interesting. I wouldn't call it point of care diagnostics, but it's self diagnostics for a range of sort of potential ailments, blood tests, urine tests, all that sort of stuff. DNA tests. So this stuff is interesting because we know that there's a lot of pressure on healthcare systems. Very hard to get doctor's appointments a lot of the time. You can be waiting weeks to get through the system if you've got a potential ailment.
What are you testing for though? It says here, it just says home self-test. I like the idea of testing myself through all different kinds of well, liquids like saliva and
diabetes. DNA testing's interesting. Anemia. I mean, you name it. There could be all sorts of things.
So you got comprising 2 blood and urine samples, 7 blood prick sample kits, 5 DNA cheek swab kits, plus a further 6 MyHealthCare lateral flow tests, which are now I could be a hobby of mine, just testing myself on a weekly basis.
Yeah, I mean, go through all that. Hypochondriac's wet dream.
That would be. I haven't asked my wife. It's something wrong with me every day.
Who needs WebMD anymore when you can actually just do the test? But
maybe it's a rename it myhypochondriac.com. I would love that. Test myself. Yeah.
It is interesting though, and I don't want to make any comparison between what MyHealthChecked is doing and the company I'm about to mention, whose name I've actually now forgotten. But it was the old oh God, what was it called? The American blood testing company.
With defrauded billions. What's her name?
I can't remember.
Yeah. Wow, that brand doesn't go down well. But she amazing. She fleeced very Elizabeth Holmes.
Elizabeth Holmes.
She fleeced well-known investors, out of money. And,
but the point is that Elizabeth Holmes, and that company, the reason it was possible to do what she did was that actually this kind of stuff could be massively important. They had a deal. One of the first deals they did was with a big chemist group called Walgreens. So there is a need for this stuff, which was why that company's name I completely forgot, Elizabeth Holmes' company, was able to get away with what she did for so long. MyHealthChecked might actually be able to do this in a proper way, and so therefore I think there may be something noteworthy in there. Theranos, of course.
That's it. Yeah.
But ridiculous.
By the way, I quite like that. I fancy going into Boots and getting all those tests. You know, I'm just thinking it's something to do for the weekend, isn't it? If the weather's bad again, spend blood pricking myself, urine samples, saliva tests. Excellent.
Now you just had a glimpse into Justin's lifestyle.
Yeah, people say, "Have a nice weekend." Yes, I tested every part of me that's possible to test, and turns out I'm not as ill as I thought I was.
I hope so.
Anyway, yeah. Marvelous. That's it. I'll be speaking to hopefully soon. Atlantic Lithium's interview will be up there very soon. But don't forget to subscribe. Hit that follow button there, subscribe button, and share it if you could. And we'll be back tomorrow. Cheers, John. Speak tomorrow.
See you later.
I don't know if they do that.